Mark, thanks so much for being with us here in Denver.
Pleasure.
So you guys had a big announcement today with your Kibali mine project. Can you tell us real quickly what it's about?
Yeah, it's first gold pour at Kibali, which is always a major milestone in bringing a new gold mine into production. And it's the first gold from the circuit, and now it is ready to stabilize the operation. We're quite far advanced with the ramp up already. We've been feeding the plant for the last 3 weeks. We've started discharging to the tailings dam, so the whole thing's working. And with the intention of getting to production, and we expect to make our first gold sale, which will trigger the start of production early in October. So a fully integrated gold mine in the middle of nowhere, which makes it even more important. And we are building 4 hydropower stations to ensure that the mine has access to low-cost power. And that is the real key in the profitability, the low-cost profile.
Yeah, why is that key?
Because we're 1,800 kilometers or 1,300 miles from the nearest port. And to give you a feel, diesel fuel costs 50% more delivered to Kibali than it does delivered to our West African operations. And so the difference between diesel generated or thermal power between 25 and 30 cents, 45 cents at Kibali, a kilowatt hour, and 12 cents hydro.
Yeah.
That's really what makes the difference.
I mean, I know you said low power, low cost. I mean, but what kind of cost do you think you guys will be looking at for this mine?
We are forecasting sub $600 total cash costs per ounce for the first 10 years. So really a low cost producer.
And how much gold are you expecting per year to get out of these mines?
600,000 ounces.
600,000. I mean, that's quite a bit.
Next year we're forecasting 550, then 580, then 580, and then above 600. But the first 10 years we average over 600,000 ounces.
So the Kibali mine's in the middle of the Democratic Republic of the Congo. A lot of people who aren't even familiar with gold at least do know that there is a lot of strife and difficulty within that country. How are you dealing with the government, and how are you avoiding any future possible conflicts that have nothing to do with gold mining?
Far too often the mining industry is so obsessed in exploiting the market, and it doesn't look at what is it delivering as a foreign investor into a emerging market. And the absolute fundamental building blocks of Randgold Resources is that we are clear about that. We only develop world-class assets because they're the only assets that can really contribute to the host country treasury, the employment of people, and the local communities, as well as return the sort of returns our investors expect from taking the risk of investing in those countries.
Are most of the people employed at the mine from the region, or is it a mix?
You know, we have to bring, and I think that's important that countries appreciate it. If you want to upskill people, you've got to bring a certain amount of foreign skills in to upskill people. But again, the industry tends to err on the fact that they feel comfortable with expatriates. And Randgold has got a very real drive to ensure that local management are in place within the shortest possible time. So for instance, Kibali already, the management team is over 50% Congolese. And as far as the operators go that have just commissioned this mine with our commissioning people, we went out to the communities, selected the most intelligent people in those communities, immediate communities of the village, the immediate villages around the mine. And then we sent them to our operations in Ivory Coast and Mali to train alongside the operators there.
Sure.
And we brought them back to commission. So we have a real commitment to investing in local people, not only in Congolese people, but in local skills.